right? And you're making it exponentially harder for the working class to rise in society or to acquire anything of value. And you're making it exponentially easier for the property class to remain entrenched in power. And that seemed to me to be grossly unfair. I think if you don't have property rights, then your life is hopeless. So anybody in the world without the ability to store economic energy in the form of property or in the form of a proper money can't plan for the future. I liken it to being a type 1 diabetic where you can't form fat. So if you can't actually store energy for the future, then by definition your life is hopeless. Can't plan anything in advance. You're living day by day, hand to mouth. And on the day that you fail to hunt or you fail to catch something, you go hungry, and after a few weeks of it you starve to death. I think that the best money that we had for 10,000 years was gold, but we know that gold is imperfect money and we can trace thousands and thousands of wars to it. And we can trace tens of thousands of stories of people that saved their money in gold to have it seized or lost. I think if we look at the history of modern currencies, right, the US dollar is the winner in every war in the 20th century, and it's lost 99.7% of its value in 90 years and is on track to lose 99.9% of its value in 100 years. That's the best one. Right? So every other one was worse than 99.9%. If you want to buy an asset and you're a working class person, up until the year 2020, you would have to increase your after-tax cash flows by 7% a year in order to keep up with the rate of inflation. And if you lived in other countries, you might have to increase your cash flows 14 or 15% a year to keep up with inflation. The formal government measures are CPI, but CPI is the lowest possible metric that you can calculate, and it's engineered in order to not go up in price. Distinction of why life is hopeless is because the currency is collapsing in value. If you're working class, you can't buy assets. You might be able to buy products and services that are highly manufactured with low energy content in them. But high energy content, unique, scarce assets get progressively more expensive. Theoretical perfect money would be an immutable ledger that's mathematically correct. That means whatever your math system is, if it's 100 million coins, 1 billion coins, 1,000 coins, then 10 stays equal to 10. So if you had a mathematically correct ledger, it was shared by everybody in the world. No one could corrupt it and change it. If it was run by a deity, incorruptible, you'd have perfect money. In the absence of God wanting to run the monetary system, the next best idea is you create a computer software program that will run such shared immutable ledger. You make it shared and you make it immutable by letting anybody in the world run that software and having all the nodes on the network check each other and kick off the corrupt nodes in order to maintain a degree of integrity and virtue in the system. I think the second quarter of 2020, the policy response to the pandemic was to lock down most of the economy in the world. Main Street shut down. And the monetary response was to lower interest rates to zero and start pumping money into the economy through asset purchases, and to loosen bank loan lending restrictions, lower the reserve ratio. And you saw something which, I kind of view as perverse, which is the stock market recovered to an all-time high at the time when the economy was the most dysfunctional in our lifetime. And so in the year 2020, you could say, if you were a Wall Street company, and if you did nothing for the entire year, you had the best year of your life, you were up 30%, you made a fortune. And if you're a Main Street company, it was, first of all, you were almost regulated out of existence, so you couldn't operate, right? Every possible impediment to operation, to doing something, providing a product, providing a service, etc., was thrown in your face. But if you were a Main Street company, and if, despite all the regulations that prevent you from operating, you generated 30% more cash flow, you were the same as you were at the beginning of the year. You have to work 30% harder to get nothing in one part of the economy, and you didn't have to work at all to get 30% richer in the other part of the economy. And I saw that as being extremely unfair. The problem with a weakening currency is you're continually transferring energy from the working class to the property class, right? And you're making it exponentially harder for the working class to rise in society or to acquire anything of value. And you're making it exponentially easier for the property class to remain entrenched in power. And that seemed to me to be grossly unfair. Pretty clear from the executive order that the view of the White House is that this is profound technology that's good for the civilization. Mm-hmm. I think if you look at Congress and the Senate, I think you've got a remarkable degree of support for this as new technology. I think the faster that the society regulates it, the faster it'll grow.
And how does that work?
Because the number one thing holding Bitcoin back is the 17,000 other crypto assets that are unregulated, that are creating noise and volatility and anxiety in the system. And so that's a liability to the asset class. And then I think the other thing holding it back is that there's $100 trillion of capital that's afraid to enter into the network because they see the 17,000 other crypto assets and they're waiting to see how the regulations will evolve. Right? And the thing that's holding the industry back is an ambiguity about the definition of a digital security versus a digital property. And because there's so much ambiguity, you have thousands and thousands and thousands of digital securities that are competing with the digital property. And if you're a rational person, and if you can't distinguish, and you're looking from the outside and you say, well, I'm sure there's 1,000 digital securities out there that are currently unregulated, that are being treated like commodities, I think that would give you pause. Some dude creates a dog token, issues it to his friends, levers it up 100 to 1, cross-collateralizes it into another token, trades it at midnight, tweets about it, cross-collateralizes that into ETH, then trades that against Bitcoin. Okay, what could go wrong? So people look and say, well, Bitcoin's highly volatile, I'm afraid to own it. Where's the volatility coming from? It's coming from the excessive leverage, the unregistered securities that are cross-collateralized into the asset class. It's coming from immature tax regulation. If you sell $1 billion of Apple stock and you buy it back 18 minutes later, right? That's a wash trade. You can't take a tax write-off on that because you didn't actually dispose of the asset. You were just trading it back and forth. If you did the same thing with a crypto asset, you could. So there's an incentive for someone to wash trade aggressively with leverage crypto assets. Why? No good reason. If you thought about it a while, you would say, if you're going to have a tax law that says you have to wait 30 days before you buy something back in order to take a deduction against it, you should probably be consistent, right? And a fungible share of Apple stock looks like a fungible token of Bitcoin. They both kind of look the same. But the treatment of one is different than the treatment of the other. So if you have asymmetries in the society where one thing is treated differently than the other thing, either with more leverage or you're encouraged to trade it with volatility, you shouldn't be surprised that you get that volatility, right? If you look at the crypto economy, you could divide and segment the market into crypto property, cryptocurrency, crypto securities, crypto art, crypto platforms, crypto exchanges. Bitcoin's crypto property. It's the apex crypto property, and it's 100 times bigger than the next viable crypto property. And the regulatory question, the big one is, are you allowed to own property? And the answer in North Korea and Cuba is no. Right? The answer in China is sort of sometimes for a while, we're back and forth, right? Right? Do you own your house, or you have it for 70 years or 100 years or whatever? But mostly, yes, you can own property. In Western Europe and the US, generally you can own property. So the other regulatory questions are, what's a crypto exchange? Okay, if you're an exchange, can you actually trade? And do you need to have a surveillance agreement with the SEC? A national securities exchange in the US can let you trade stocks with 2x leverage. Okay, so how much leverage can you trade with? Right? Who's responsible? Is a DeFi system an exchange? I think a lot of people think yes. Is it decentralized? No, not really. They don't think it's decentralized. They've said that. So is a token, this token, is this equity or is this property? If it's equity, what kind of disclosures do you need to make on the equity, and what's your civil and criminal liability on the promotion and the trading of that token? Those are all outstanding questions that'll have an impact on everything other than Bitcoin, right? What are your obligations under crypto art? If I sell you 10 NFTs for $1 million each, and I swear to you that I'll never mint any more, and then I create another anonymous persona and I mint 10 more and I sell them, and then it comes out, right? Did I defraud you? Right? At what point does an NFT become a security? Right? I mean, it's pretty easy to say a $50 piece of art doesn't feel like a security. What about when it's $50 million? What about when it's $500 million? Is that a security then? And then with currencies, there's three types of, a cryptocurrency is a dollar. So I want to move a dollar from me to you, right? The thing that creates currency in our modern world is a nation state law. If the nation state designates that you can transfer the asset from me to you without a taxable event, it's currency. The euro is a currency, the dollar is a currency. If I transfer gold or shares of Apple stock or a building to you, it's not a currency. When the nation state is no longer effective and the government collapses, of course the currency collapses, and then people adopt another currency. In El Salvador, they dollarized. Lots of countries, they dollarize because their nation state is no longer able to maintain a currency. Now, what cryptocurrency is compliant? The President's Working Group paper implied that the preferred stablecoin dollar would be issued by an FDIC-insured bank. That's what they would like. There is no FDIC-insured bank currently issuing stablecoins. So the investment-grade blue-chip cryptocurrency is an ideal that does not exist in the real world.